Republican Congressman Jeb Hensarling of Texas. Congressman, it is great to have you with us. Welcome. And what's your reaction to the testimony you heard from Janet Yellen this morning?
Well, I was disappointed because what we have seen now is that middle-income families are still struggling in the slowest, weakest recovery in the post-war era, and yet it seems that we will continue on extraordinary measures that were employed back in 2008, and here we are in 2015, and yet they are not more transparent, they are not more accountable. And the real issue is, economists I know believe that we are best served when the Federal Reserve will communicate to the public what their monetary policy will be. And yet we didn't hear it in this particular testimony. And yet we always hear from the Fed, well, wait a second, this has to do with our independence. And I think the exchange you saw with Chairman Garrett and Chair Yellen had to do with the fact that many of us believe that if independence is an issue, then we really ought to examine the independence of the Fed from the executive branch of government. That's where the real threat is, not from the legislative branch that merely has asked the Fed, tell you what, you make up monetary policy, you can waive it, you can change it, but you ought to have an obligation to communicate it to the rest of us. And when you don't, you hinder economic growth, you hinder a healthy economy, you hinder middle-income America that now has smaller paychecks and a smaller bank account.
Right. I will just say that it's interesting to hear your perspective because a lot of people on Wall Street are saying we're drowning because we're hearing too much from the Fed. You know, there's too much Fed talk out there. The statements have never been longer. You know, the minutes from the last meeting were much longer than usual.
But it's not quantity that counts, it's quality. I mean, I'm sitting here questioning Chair Yellen, and I think is an incredibly talented, intelligent lady, great public servant, but I asked her about a statement in her testimony that essentially said we might change the forward guidance, but we will not necessarily change our targeted Fed's fund rate. And so I began to question, okay, fine, we've got hundreds of pages of forward guidance, but if it doesn't change monetary policy, what's the good of it? I mean, how many trees were sacrificed for what is essentially meaningless verbiage when we need a more predictable, rules-based monetary policy, which I think history shows will create a healthier economy? We didn't hear that from the chair today, and that was disappointing.
Understood. It goes back actually to one of the questions hanging over the entire testimony, and that's the role and the goals of the Fed. We heard a different exchange talking about whether it was appropriate for Yellen to be so concerned about long-term unemployment. But it is Congress. You know, this is the thing. It's up to you guys to set the Fed's mandate, which right now includes focusing on stable long-term interest rates and full employment. Why not, if you're upset with the approach here, change the goals or change the wording or change the legislation that gives the Fed its purview?
Well, we did that in the last Congress. The House Financial Services Committee moved a bill that, again, would simply ask the Fed to reveal its policy. It's really about transparency and accountability, just as long as they reported it to the rest of us, and to ensure that the Fed, as you know, just doesn't have to do with mandatory policy. It has to do with being a prudential banking regulator, and yet they are exempt from many of the provisions like cost-benefit analysis that other prudential regulators are required to do. So we moved that bill in the last Congress. I intend to move a similar bill in this Congress. I'm sure we'll have hearings to come, but it's clear that we're getting kind of the Heisman from the Fed. Now, I will say I've never met a federal agency that wanted more oversight, more transparency, or fewer resources, so I'm not necessarily surprised at the Fed's reaction.
Understood. It's interesting to talk about the whether, again, to the point of the question, I guess this is an issue about the Fed trying to effectively do what it determines the data is telling it to do in this environment. Perhaps all of this is simply because some would argue using a rules-based strategy like you're talking about, interest rates should be negative, and it's kind of hard to take them there. So we're left with this kind of, make it up as we go along. Lots of words, lots of guidance, trying to talk through our goals that we can't necessarily achieve through conventional means.
Well, I'm not really sure 6 to 7 years after the financial crisis hit, whether we still ought to be making it up on the fly. Again, the extraordinary measures of 2008 have seemingly morphed into the ordinary measures of 2015. And again, there's probably some reason why we continue to have the slowest weakest economic recovery in the post-war era. Now, I think a lot of it has to do with Obamacare, it has to do with Dodd-Frank, it has to do with increased taxes, but it also has to do, I think, with a more improvisational monetary policy. And listen, accountability and transparency on the one hand, and independence in the conduct of monetary policy, those are not mutually exclusive concepts. Again, all we're asking is that the Fed tell the rest of us in the economy what are the factors that you will use to conduct monetary policy, how will you weigh them, and if you change your approach, you need to communicate it to the rest of us. That's not what's happening. And again, if you look at the period of great moderation from basically the mid-60s or early 80s, you can see where the Fed used a more rules-based, predictable approach, and we had greater economic growth. I don't think that's a coincidence. I think there is some cause and effect to that, as do many national and prominent economists today, and that's what we believe the Fed should do. Dodd-Frank has vastly expanded the powers of the Fed. We're having a Fed selectively intervene to prop up credit markets that it's never done before, using tools that it's never used before. There also has to be a commensurate increase in the congressional oversight of these activities.
Just a final question before we let you go, Congressman. Then the concern lots of people have about the bill that you're discussing here is that it would do precisely what you're trying to avoid, which is it would further politicize the Fed because of this pressure, this political pressure it would constantly feel bearing down upon it. Are you confident that this wouldn't do that, that this would give the Fed, more ability to be fully independent in its measures here, even as you're discussing how you prefer for them to raise rates?
I don't understand how transparency, accountability, and merely reporting to the public somehow is an interference and somehow politicizes the Fed. If that's true, maybe we shouldn't have the Fed testify before Congress at all. And maybe Janet Yellen ought to cancel her weekly luncheons with the Treasury Secretary. Now, we don't know what goes on in those weekly sessions since those are private. But if that's the concern, why should the Federal Reserve ever have to testify? I mean, are they always going to continue to be the great Wizard of Oz behind the curtain? At some point, we need to pull the curtain back. Listen, there's a lot of good and smart people working at the Federal Reserve, but they need to ultimately have their assumptions tested in the court of public opinion. And that means testifying, and it means telling the rest of us, what is your methodology? When are you going to change it? When are you going to waive it so that we can actually test this in the court of public opinion?
Understood.
The Federal Reserve doesn't have a monopoly on hiring smart economists. There's a lot of smart economists all around this nation. They ought to be able to judge this monetary policy in a more open and transparent fashion.
All right, Chairman Hensarling, you have major case. Thanks for being here this afternoon. Really appreciate it.